Hi, in this class, we will cover two topics, investing into stock market and trading into a stock market. For many people who are beginner, for them it appears that stock trading and stock investment is one of the same thing. And for people who come into the market, spend some time here, they start debating in their head whether they have to be a trader or they have to be an investor. They have to choose between one, whether they want to trade into market or they want to invest into market. This is also one of the very debatable topic among stock market people. So a lot of people keep on debating. I mean, when I'm making this course, a lot of people also keep on messaging me and asking me about whether how exactly is investing better than trading, or why trading is having a better advantage on investing. In this class or in this whole course, I'm not gonna promote or demote any of the theory, whether it is investing which is better or it is a trading which is better. It's more to do with what you are comfortable with, what is the path you have chosen for yourself. So obviously there is good amount of risk involved into both of them. It's not like only a trader will lose money or only an investor will make money. It can happen vice versa. You can make money in both of the way, you can lose money in both of the way as well. It's you who have to identify whether you want to be a trader or you want to be an investor into the market. And that has to be backed up with your skill set. In this course also, this complete course, we are talking about fundamental study, where we are going to understand how to do investment and how to manage the risk of your investment. And since investing into equity market is about creating portfolio, how to have rebalancing act into your portfolio. So these these three sections, the risk management, the portfolio management, and the fundamental study, is about investing into stock market. However, we go and learn about technical trading or technical analysis and then option writing strategies. They are part of the trading mindset people. So if someone want to know all these things, they have to go to all the 10 sections. But if someone don't want to be a trader, it is not necessary that you go and learn the technical analysis or even learn the option writing strategies. In risk management module, we are covering future and options. Now, future and option is the base of option writing strategy. You need to know options. So this is one overlapping chapter. Options can be used also to hedge your portfolio. Future can be used to hedge your portfolio, means protect your portfolio, apply a kind of risk management into your stock portfolio, and these instruments can be also used for trading purposes. Option writing strategies, option trading strategies are part of nothing but the trading tools, right? Similarly, technical analysis is more used for trading, more, not more, I mean it is used to it is this science has been developed to basically help traders, right? So I told you about how we are going to cover both of the cover both of the area, so that it help people who want to become investor as well and people who want to become trader as well. And moreover, it also give you an exposure that you can decide whether you are more like a trading mindset guy or an investing mindset guy. Well, let's jump to the topic now. Investing, very simple. You got resources, unutilized resources. So you, let's say, make 100 rupees per month. You spend 50 rupees per month. That's the basic necessity, then you are left with 50 rupees. Now what do you want to do with this 50 rupees? We are Indians, we believe in saving. We want to save it for our future use, right? So we will go and invest this money into real estate, gold, FD, or equity. And when we invest, doesn't matter where we are going to invest. Even if you go and invest into real estate, how long term it is you never buy one house today and sell after 15 months. You give it a time, 10 years, 15 years, and then you see that you make money into real estate. A house which you bought at 50 lakh rupees become 2 crore rupees house. Similarly, when you buy gold today, or let's say 10 years back when you bought gold or your parents bought gold, and you used to hear that time that the gold prices were 12,000 rupees per 10 gram, and right now it is 40,000 rupees per 10 gram. In 12 years it has given 4 times return. Well, nobody just bought the gold and sold it immediately. What they did, they bought it, kept it for a long period, and then allowed it to grow. Similarly, you go and do the FD for 1 year, 6 months, or for a longer time. In FD, there is a constant return which is promised from the bank side, so you do not worry about the time frame. But investing is something which is done for a long term perspective. So similarly, when you go and invest into stock market, so when you hear the story of Warren Buffett being a value investor, yes, he is a stock market investor. He invests looking at the value of the company, and he understands that the value at which he is buying is much lower than the value what this company deserves. And then he also see that this company is growing to grow multiple fold from here, and that's why they will make money. Well, this is called investing. Let's come back to the trading. In trading, you don't look at the long term, but you try to find opportunity in a very short term frame and try to take a benefit out of that opportunity. To understand it, let's have 2 3 examples here to understand trading in the right perspective. Okay, so you go and buy vegetables, right? Now when you go to buy the vegetables, someday you buy vegetable at let's say potatoes you buy at 25 rupees per kg. The another day you probably get in the market 30 rupees per kg, right? Now from the person you are buying potato, he must be buying it from somewhere, right? And so let me tell you the process what happens. So he go to mandi, bigger mandi, and he bring potatoes from there. He have a data point, lot of data point. He's not a data scientist, but he knows from his experience that if he go to mandi and if he buy 100 kgs of potato, he will get it at 10 rupees per kg. When he bring the same potato in the city and start selling at his shop, he'll be able to sell at 20 rupees per kg. So he is quite confident that he will make profit in potato selling, buying from one market and selling from another market. At the end of the day, what he is doing? He is doing trading. In the morning he is buying, by the evening he is selling all the potato, and he got a very good strong data point that if he buy at 10 rupee, he will be able to sell at 20 rupees and he will make 10 rupee profit. On 100 kg, he will make 1000 rupee profit. There will be transportation cost, the cost of the rental, then he is selling other vegetables as well, then he has employed some people. So trading is more like a business. The moment you start thinking that you are going to make money on a daily, monthly, quarterly or weekly basis, you start getting a mindset of a trader. Trading is a full-time activity. So this potato seller, this vegetable vendor, it's a full-time activity for him. He keep a watch on the market every day. He keep on a watch of the sentiment of his consumer every day. He know that he has to bring the good potatoes, and then only he will not lose customer but keep on building the customer base. So trading in a stock market is more to do with this only. Traders identify opportunity where they know that within very small span of time, sometime even as low as a fraction of second these days, when we talk about algorithmic trading, it is about executing multiple trades within a minute, those trades which will be independently profitable for the people who are trading into the market, to as long as 30 minutes, 1 hour, half a day, 1 day. So trader perspective is almost always small time frame perspective. The trading techniques have evolved. The way value investing techniques have also evolved as per different sectors. I mean, the basic principle stays the same, that you have to look at the bigger market size. So now we'll get into more detailing of the investing and trading with more example. So investing is all about identifying those companies which are going to cater large pool of customers, which has big market size, and they have a potential also to reach to a place where they can serve to a large segment of that customer class. And if it is going to cater a very small segment of people, small segment of clientele, they have to be working in a very niche business area where they have a good pricing and good profitability on their services and product. So identifying those companies with strength and then investing into them in early stage is more about value investing. So people have different approach even in investing also. So some people think that passive investment, so now I'll bifurcate the investing also into two parts and then trading into multiple part as well. So first, again coming back to the investing side, so there can be two kind of investors. One investor, he could be an active investor, another could be a passive investor, right? So an active investor always keep on doing the relative valuation and keep on thinking that he always have to stay into only those companies which he finds still very valuable to buy or undervalued than its competitor. For example, let's say there is an investor, he thinks that he is an active investor. He will he'll try to beat the market and stay market neutral, and in order to that he is having some risk management measures, like as per the beta he is going to short nifty future to hold his portfolio and protect his portfolio. And then he thought, okay, 15% of my portfolio will be there into IT companies, and within IT companies also I'll just pick up the blue chip company. Now he have five options: TCS, Infosys, Wipro, then Tech Mahindra, and L&T Infotech, let's say. Out of these five companies, he think about investing into Infosys at this point of time because he think Infosys is more valuable. But he keep a watch on the other four stocks also. Then he got to know that Infosys has run up by 40% and given really good return. And now he feel that out of all these five companies, Tech Mahindra is probably the most valuable company. So what he'll do, he'll sell Infosys and buy Tech Mahindra. Well, this is kind of a strategy which active investors use. He keep on checking the relative valuation of companies and try to stay only into those companies which he thinks that still valuable to buy, and keep on selling those companies where they think that they have made enough money, right? Now there could be a passive investor who always think that no, if there is one company which is doing well for me, I'll stay invested into them for 5 years, 10 years without looking at its competition. If this company is working good for me, I'll stay there. Well, that is called the passive investors as well. Some investor can simply go and invest into index neat ETF and become the passive investor of the complete market, because he believes that in next 10 years the complete market is going to give 10%, 15% CAGR. Well, similarly you have different kind of traders. And to understand the different trading style and different kind of traders, let me tell you a very small story. I happened to meet a gentleman who was 75-year-old, and he had a broking house from his grandfather time. I mean, his stock broking house was situated in Lahore. Then they migrated to Delhi, and I just don't want to take the name, but yeah, they were quite a famous name till last 10 years in Delhi NCR region. So he told me one story that way back in 1970s, he used to trade, and he told me that that time, so I didn't verify this information, but I found it really a good example to include into trading class. So he used to tell me that there was Jaipur Stock Exchange and Bombay Stock Exchange, and they were rich people because they had two phone lines at home. I mean, getting a phone line in 70s is not a small thing. I have heard stories about Infosys where Mr. Narayan Murthy struggled 3 years straight in a row to get a phone line for his company Infosys. And that also when he was in a business of outsourcing where he has to make calls to US. Well, I also remember that even in 90s when I was growing up, getting a telephone line was still not that easy, and it were super expensive. Well, this is the background that telephone lines were a kind of costing, a kind of edge over other people, and this person was having two telephone lines, and he used to call both of the exchange broker at a time. And let's say in Reliance is trading, okay, so or any other ABC company is trading, so he will call and ask the price of ABC. At one exchange, let's say someone tells him that the price is 950 rupees, and on another exchange a person tells him that the price is 920 rupees. Then he'll instruct both of the brokers to buy sell. So where he is getting at 920 rupees, he will ask him to buy on behalf of him, let's say 500 shares, and the place where it is selling at 950 rupees, he will immediately sell that, okay, you sell at 950 rupees. You will wonder that is it a situation which can happen? Let me tell you, yes. When electronic exchange was not there, people used to trade on floor, and when they used to trade on exchange floor, the information didn't used to go, travel so fast the way it travels so fast these days. So he tried to find this kind of gap and try to make profit, and he said he made a lot of money, but then at every trade he was taking risk also. Out of 5 phone calls in a day, he may not find 5 trades and just find one trade, but still those 4 calls will cost him a lot of money, because even if he's going to spend 2 minutes here, 2 minutes here, 4 minutes, those days are like 150 rupees, 160 rupees in daytime. Now even more than that, I remember in 2001 I used to pay 32 rupees for 1 minute of phone call, and that's why we used to go after 11 p.m. in the night to so that we can call at our home from our college in Bits Pilani at 6 rupees per minute, because I remember it was 24 rupees per minute in the daytime and 6 rupees after 11 p.m. Well, this guy was calling in the daytime in 70s. I assume that the per minute phone call will be anything between 50-60 rupees. And those days, 60 rupees into 4, 240 rupees will be a good sum. So he was taking that risk. That risk plus he had that advantages. So similarly, people these days, the traders these days have different kind of advantages. So these days the latest world is going around algorithmic trading, where people work on the order book, people work on the information which they can catch faster than anybody else, and they can send their order the faster than anybody else in the market. NSE, BSE, they have started giving facilities like colocation, where they are happily ready to place the servers of these traders in within the exchange, which will be connected to the stock trading system. Well, so trading is something where you always have to acquire new skills, where you will be able to beat everybody else in the market. You have to be very, very competitive. You have to be good at mathematics. You have to be good at computing these days. Meanwhile, there were other tools which also got developed. Technical analysis is one of them. So there are people who think that chart work. On charts, they get certain patterns. Those charts are obviously based on certain data, and obviously stock prices trade in range. So within that range, they know that at certain point of time maximum selling happens, at certain point of times the maximum buying happens. So they keep on tracking these data points and try to trade using technical analysis as well. In option trading strategy, some people are option trader. Option is an instrument which is more like an insurance. So people either try to become insurance buyer or insurance seller in terms of option writing, and then try to see that they are able to get an arbitrage between 2-3 different options and take some money home there also. In different situations, they think that since there is certain premium or certain premium which is only at risk, but the opportunity will be very, very big when trade actually turn into their favor, they do option trading strategy. So there are different kind of traders. Traders are people who just go and take every 1 minute trade. People call it scalping. There are intraday traders who know that in certain trading sessions, certain psychology work from the market, and they try to take advantage on those data points, right? So it is important that you identify yourself whether you want to be a trader or an investor. My suggestion is only one: you cannot be both. Trading is a full-time activity. If you want to be a trader, You cannot do it passively. If you are doing it, okay, I mean, this is a lecture, this is a class where I was just trying to explore and tell you people my own understanding about trading and investing. But here I'm going to give you a suggestion also, because I know people who are taking my class, they will come back with a lot of questions. So from my side, I have only one advice. If you want to be an investor, it's very easy in terms of taking that decision of which share to buy or not. If you know the basic of how companies work, you learn. I mean, even in through this class, I can tell you that you will be able to learn this much, that at least you will not do the classical mistake which other investors do. So it's very easy if you are working class person and learning through this course so that you can safely invest into it. You will be able to achieve through this course only. If you want to be a trader, I can give you the tools in the coming chapters. You will be able to learn those trading techniques, but you have to be doing it full time. It will require a lot of practice and patience and discipline, which you have to keep as a trader. So it is very important that you define yourself. My suggestion is only one: you must define yourself whether you want to be a trader or an investor. Market is good for both of them. Both of them can make money and lose money together. you know it's all about how one person is trying to perfect himself. Not everybody who is going to learn technical analysis will make money. Not everybody who is going to learn technical analysis will only lose money into the market. Some of them will really outbeat others, so you have to be one of them if you are deciding about becoming a trader. Well, so after this class, I want that you understand this part, that investing and trading are two different area altogether. And when you are coming into the stock market, you have to define yourself very clearly on day one based on your own behavior. So if you are a person who have a lot of patience, who is stable, and who think that okay, stock market is not something where I'm going to make my career, I would tell that you stick to the investing part. People have made huge money. People invested into HDFC Bank have made 800 times money in last 25-26 years. There's so many other examples left out there. You have to just identify your choice of company, 5, 6, 7 companies, keep investing into them, and if you stay for the long term, you will make money. And we will learn obviously this part, that how to identify those companies. So investing is something which can be done part time. Trading is not something which you think you will be able to do part time. It needs a lot of focus. It's a wholesome approach which you need to bring. So any question if you have related with investing and trading, I would suggest you apply those questions on yourself and you try to ask the answer from yourself, whether first you want to be an investor or a trader. If you want to be a trader, then only you try and go and explore the different kind of trading techniques. But let's say you have already made up your mind that no, you're not the guy who is going to, not everybody loves stock market, not you should love stock market. There are doctors, engineers, and many other people who are into their own profession and contributing to the economy, and they can be an investor. As a trader, you have to come into the market, and then only you will be able to understand completely that what are the gaps available, what are the latest skill set which will be required. So last 5 minutes, I know it's more about where I gave you my personal opinion. That's just because this is one common question again I keep getting, where people want to debate with me and tell whether investing is better or trading is better. And I always tell them only one thing: it is you who have to master over both of the skill by defining your own way of taking the market, right? So thank you very much for this class. We'll see you in the next class. Thank you.